Okay, good morning and hello everyone. Welcome to ECB Thursday. Good to be with you this morning. Heading into the close of the week, obviously we have non-farm payrolls on tap tomorrow. We have the ECB presser, which is about to hit the wires. I'll keep you updated with those comments as they cross from Mario Draghi. By the way, it is Mario Draghi's birthday, so a quick note there. But in all seriousness, we are heading into some interesting areas. Dollar index, you're looking at it right now, heading into that trendline resistance we talked about yesterday off the highs. Permendra, good morning. Eileen, good morning to you as well. Happy ECB Thursday. Good to see you guys. Um, but relative performance is sort of split here into the start of the session. Again, that trendline resistance coming into view right now. Remember, the major resistance is going to be that 12,071 level. Again, the high day close or the reversal close, excuse me, from the April subsequent to the high that we made for the year, and also the stretch highs that we made last month. Okay, sorry about that, guys. Looks like I had no screen for a second. Thanks, Dale, Eileen, appreciate that. We're back up and running then. So back to the dollar index. Here's the trendline resistance that we were watching off the highs. And remember that 12,071 level is going to be the reversal day close, like I said, subsequent to the high for the year that we made, and also the stretch highs for August. So heading into NFPs, this is really the major key. I mean, look, at the end of the day, if we break above this, you're basically looking for the high day close at 12,123. We have a sliding parallel there. Actually, this is just a regular median line off the lows, which has been very nice in pivots and price action. And if we push through this on a closed basis, like we're trying to do right now, here comes that near-term resistance at 12,071. Draghi says QE continues to proceed smoothly, quote unquote, as the press conference continues to move along. We'll keep giving you updates on our end. All right, so let's jump right into the charts. There was no update yesterday, guys. Everything is sort of in wait and see approach as we head into all the event risk with today's ECB, tomorrow's NFP. I've been looking at the euro crosses. We've been taking a look at those all week, and that continues to be, where our primary focus is. Here's what euro dollar looks like subsequent to the piece that we put out. Well, I mean, we've been following the euro for weeks. So from a daily standpoint, we're now testing that lower median line parallel again. The break here, you're looking for that 11,052, 11,000, 111.52, 111.15. Nice confluence region of support there. Remember, this was the near-term bullish invalidation line. Okay, and I'll take you in the scalp in a moment. So now that we're below this, we're not looking for long exposure any longer. I'm looking for long exposure possibly down here. You have the 100-day moving average, 618 retracement off the lows, the close high for the opening range on August, and that sliding parallel that dates back to the highs that we made back in October of last year. So there's a lot to look at right down there. Here's what the scalp looks like intraday. Okay, and there was the break. I actually got stopped out on a long on here on this trade. So on yesterday's break below this embedded parallel, which we're going to get rid of right now, I just wanted to leave it here for the discussion. We came into this, we had a nice little wick there, stopped out, or the decline stopped rather. There was a nice 5-minute triggered momentum that we jumped into a couple minutes later, and we sat in that for pretty much into the open of Asia until this dip took us out. We held resistance, and here we are. Downside support. At this point, like I said, 111.15, 111.55 is going to be just a soft target. We went over that, stretch lows from last week. So you have the levels pretty well defined on the downside. This, in my humble opinion, might be a nice entry to try to press a euro long at this point. We'll have to see some basing and give us something to take a trade against. But certainly this is an area of interest for us on the euro crosses. And we're going to bring down, at this point, the bearish invalidation level now comes back to that same region. So we need to get through this to shift this back to the upside. Right now, you're looking for that drop lower towards that 111 handle. And just to give you some retrospect, here's the operative sort of pitchfork that we're working off of. Okay, it's the same one that you're looking at right here. So that would coincide pretty decently with what we're looking in the US dollar, right? With that one giving us possibly another stretch higher first before we start turning over there as well. And it kind of all fits together. So we'll see if we can get some play here on these dollar crosses. Listen, you're heading into a thin liquidity condition tomorrow, specifically with the Labor Day weekend here in the United States. So it's going to be thin conditions. You could see a lot of whipsaw action. It's the major event risk for the month. Well, I shouldn't say that. We got Fed. It's the major event risk for the week. So just use some caution here. Okay, we don't want to get too married to any of these positions. At the same time, these spikes might actually offer some really nice entries on some of these dollar crosses specifically. Before we move on, any questions on the euro? Looking lower immediately, but we're looking to find that support back towards 111, possibly looking for some long exposure there. Here's the 5-minute trigger looks like, by the way, or the 5-minute chart rather on the euro. Draghi says ECB will use all tools within mandate if needed. Says QE having favorable impact on the economy. QE will run until sustained adjustment in CPI path. Full implement by monthly asset purchases of 60 billion. Draghi says emerging markets slow down to weigh on global growth, and ECB measures will support domestic demand. Oil price decline will help consumption and investment. And the euro just getting hammered. So here's the 5-minute that looks like down to 111.60 at this point. German bonds looks like pause as inflation gauge sinks before Draghi speaks. Okay, so they're looking at lower inflation. So here's the what markets are moving on, guys. Basically, deposit facility unchanged at 0.2%, benchmark unchanged at 0.05, excuse me. The point is this: they're seeing inflation starting to slow down, or it's not picking up as fast as they expected. And inflation is one of the primary mandates for the ECB. And as such, that leaves the door open for a lot more easing. And even if it's not additional easing to what we have, the length of the duration of the easing is likely to be longer than market expectations. So you're seeing the euro really dive hard, 11.55. Here we are attempting to make that mark right now. Unfortunately, on a move like this, guys, if we're not already in it, I'm not going to really be favoring any type of chasing on this. So we'll see if we can get that dip into this region, if it offers any type of support. Excuse me, just scrolling through the wires here, see if we have any more comments. Cuts GDP forecast for 2015 through 2017 on external or weaker external demand. So they're cutting forecasts for GDP for the Eurozone based on weakness in external demand, global demand aggregate from Europe. Says risk to growth remains on the downside. Emerging market slowdown may continue to weigh on growth prospects. Okay, certainly a dovish tone. We were expecting a dovish tone. I don't expect this to really materialize into a full euro breakdown, guys, just for the record. There's really nothing here. This is more reactionary than anything. Outlook for real GDP has been revised lower due in part to weakness in emerging markets. Says inflation to remain very low in coming months. That's probably one of the highlights here. I wouldn't be surprised if we get another leg down on that one. Draghi says inflation to rise towards the end of the year, inflation to pick up during 2016 and 2017. Annual inflation rates will remain, quote unquote, very low is the headline that keeps hitting all these wires. So I'll be looking, again, towards that 111 if we get down there for a possible entry on this, guys. Everything that we've heard so far has been what the expectation has been, specifically on the back of what we've been seeing out of China. But the caveat here is the lowering of the GDP forecast for the end of the year and the addition of the word very low inflation in the coming months is certainly a concern. So we'll keep that on radar. On a move like this, you don't really want to rely too heavily on triggers. I do like to see the momentum signature pop back above 30, though, before I start to jump in. Remember, as long as this condition holds, the propensity for the markets to keep moving lower is there. Any questions on euro before we move off? We're going to jump into the euro crosses. So we'll go euro Aus and euro yen. We'll take a look at those as well. Okay. So here's what euro yen works, or looks like rather. And that is a very similar setup in that there was a sliding parallel actually. So we were watching this setup last week. Here was the sliding parallel that we attached to the lows we made in June. If you take that same slope and attach it to the low for July, you can see that we sat on that for the last couple of days. Here's the break. Key support, critical support, I'd write down here. Okay, you're basically looking at the 50% retracement of the advance off the April low. You're looking at the stretch lows that you made for the opening range and pretty much the range lows in general for May, the median line off the highs, and they all coincide in this region right around the 133 handle, a little bit deeper than that 3350 mark. The interesting, excuse me, the interesting part here, guys, is that momentum after being overbought for multiple months and breaking above the 60 barrier. Here's the 40 hold and the first 60 break we've seen since essentially from pre-60 levels over here. And that was the mark of a much steeper decline. So I'm a little bit more hesitant here. There's going to be people calling for a head and shoulders break here, which also seems very feasible on this break. To the downside, you'd look for a longer objective target somewhere in the range of 130 along this parallel. But big support region here that we're coming into for euro yen. And yen specifically a very good barometer for risk, right? So as you head into NFPs tomorrow, typically a very strong mover is the yen. And we'll be watching for the yen crosses as well. We'll go over dollar yen, which is making a move here too. More comments saying Draghi says loan dynamics continue to improve. ECB to monitor medium-term risks to price stability. Says there are downside risks to the inflation outlook even. Forecast for economic growth and inflation has been reduced. Business lending remains subdued. Wow. Okay, so they're pretty dovish, guys. They're much more dovish than expected. Not a very rosy picture at all. So euro yen, look for that near-term support heading to 33.50 would be an initial soft target, that 50% retracement, but really it's into the 133 handle where you start to get all those things lining up right down here. Also keep in mind this, if you guys remember, I put out a piece on Daily FX last week on this, and we actually talked about it. Remember that correctionary slope gradient? It's still in play. It's still in play. So for the last, dozen or half dozen corrections to the downside on this, they've all continued to follow this gradient. And as long as we hold below that, we'll continue to eye the downside. Major resistance and near-term bearish invalidation on this still at 35.40, 35.47 here. So looking to sell bounces in this pair while below that region. Let me see. Unfortunately, on these spikes, guys, we need to get the pullback to be able to jump in again. This is a 1 minute on Euro Aus. Let me see, or Euro Yen. Draghi says ECB recovery, or Draghi says recovery must be supported by structural reform, says ECB policies are helping the economic recovery as we continue to cut inflation for okay. So I'll keep giving you the headlines as they cross, guys. I think we got the gist of what they're saying. They're going to remain at an easing or easing stance for as long as it takes, yada, yada, fluff. I don't even want to get into the rest, but the picture is pretty clear that they are pretty dovish. So we'll be looking for that near-term support. Again, honestly, guys, I would be looking to fade some of these moves. I think it's a little bit drastic on the back of what we've heard. You're coming to some major support. So if it gives out, we'll have some good risk rewards to play in the fact that you'll have a really tight stop on most of these positions. By the way, that Euro stop that we ate yesterday was literally a 10-pip stop. So well, we're not trying to call lows. We are coming in some major support targets, and we'll be interested to see if the opening of U.S. trade gives us any play on those. A quick look at Euro Aussie as well while we're here on the Euro crosses. If you guys remember, this was the setup from Monday or Tuesday. And we talked about the fact that if we broke below this, we'd be looking to sell rallies, right, back towards that key support at 58.30. So it fizzled out. We came back and tested its resistance, specifically the lower median line parallel here. Still looking for that drop into 158.30, the 158.10 level, which was the near-term resistance yesterday or last week's support. And right now, that's sort of the target on the downside breakout of this formation. In fact, let's see if there's any structure to this. Could be in play. We'll leave that here for now. On Euro Aus. Okay, here comes some interesting commentary. Euro ECB Draghi, inflation rate may be negative in coming months. Negative inflation would be transitory. So we talked about, the S&B, which is currently at negative rates as well. Here, they're saying with inflation, the rate may be negative. Okay. Sorry for the back and forth, guys. I'm just trying to read the headlines here to see if there's anything really, really impactful coming out. But right now, as far as I'm concerned, it's all just rhetoric, and it's the same type of stuff that we heard from, the European Council before. We'll do what it takes. Yes, everything's transitory. The interesting part is that they are starting to move downward. There are revisions on inflation, on growth, and in line with everything that we're seeing globally, not too good. Quick look at the equity markets. The less futures trading higher on the session, but we'll see if that changes here. All right, so any questions on the Euro Yen, Euro Aus, or Euro Dollar before we move off? Guys, feel free to throw your questions and trade setups out. Again, I'm pretty light this week on setups. Haven't really been involved in too many except the Euro crosses that we've been covering. The other one that I was really aggressively looking for is Dollar Yen. I think I might have missed entry on this one last night. It started to push through that resistance level that I highlighted right at 120.50, which was our entry, pushed right through, and then we started to break to the downside here in the wee morning hours. Obviously, I wasn't awake to see that, but, I like this trade a lot too. And we like the trade to the downside, sub 120.50. The near term or immediate bearish invalidation would be 120.78, 120.80. That is such a critical region, guys, of resistance for so many reasons. You have the 618 retracement just of the weekly decline, okay, which comes in at 78 or so. You have the April highs, which comes in at 120.80, okay. On the daily chart, you have the 200-day moving average at 120.76, the median line off the high, and they all line up right in this region. Add to that the low day close for July. So it is stacked. It's stacked right over here into 120.77, 120.80 for dollar yen. And this is where we'd like to be short off of or against on any case. So on an upside stretch here, I'd still like to find a stop against that region. Looking for 119.55 is an initial target, 118.90 is a secondary target. If we break through this on the other side, and these are pre-levels for NFP tomorrow, guys. If we break through this 120.80 barrier, you're basically looking for 121.70, 121.80, and that's the broader bearish invalidation. If this thing gives out, I'm looking more so almost continuation. Okay, this is the December high. You have the basic trendline support, okay, off the yearly low that we made in January. Support, 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 break, resistance, resistance. And it all lines up with that December high. So if we break back above that, look for continuation. So as I said in the title yesterday, a little bit cheesy, but the the battle lines are drawn ahead of NFPs for dollar yen. I think it's going to be a beautiful play. Obviously, a break of the weekly lows, which comes in at 119.24. You got targets down there at 118.36. 117.50 is a soft target. This is the huge confluence region you'd be looking for on a breakdown here. Basically takes you into the 116 zone. So here's what dollar yen looks like on the intraday. Okay, the slope line still in play. We pivoted above this and we're kind of holding it as support. Still looking for a drop lower. Momentum failing to hold 60. It did get the trigger break, which was a beautiful play. Again, this is in the wee morning hours here in New York, right ahead of the European Open. Looks pretty good. Again, quarterly daily ATR is about 40 pips, okay, 38 pips. So keep that in mind. If you took that short off the highs, you should be wrapping up some of that position already. Questions on dollar yen? Looks like you might actually be getting a trigger here. Okay, some slight divergence into a trigger break. I don't really like the time it's happening, so I'm not necessarily too keen on jumping on board here. You could get a topside scalp towards that 120.50 zone again. It's going to be pretty tight. Wouldn't really be looking to play that. Rather, I'd rather use that short, or rather use that rally, excuse me, to get back on the short side. Any questions on dollar yen? Okay, moving right along. British pound. Here's what it looks like on the daily, coming into an area of support as well. That namely is a big region that we've talked about here as well, 52.18, 52.46. It's the 100% extension off the high, so 2 equal legs down. And it also is defined by 50% retracement of the entire 2015 range. Okay, so dead on center, 52.46, excuse me, 52.47, 52.20. That's where we wicked out. The low today so far, 52.32. So looking for, some support. I don't necessarily want to call this a setup. There's no play here. I won't put this on the intraday, charts, but certainly we'll be looking for some sort of reaction off this as we head into tomorrow. Remember, next week is also a big week for event risk as well, guys. You have the RBNZ, the BOE, the BOC, I think, is next week as well. So starting off the month, there's still plenty of event risk on tap. Looking at the dollar index real quick here on the side, guys, looks like we're probing that area of resistance we just talked about. Keep an eye on that into the close today, 10,000 or 12,071, the median line off the lows. Eileen, everything okay? Just click the wrong button. I'm glad for recordings. Okay. No worries. Interesting reaction that you're seeing a real strong bump up in the greenback as well here. Oh, but long story short, I don't want to digress. The near-term picture for the sterling. There's that same region of resistance, of support rather. Again, this is pretty huge, guys. So I do want to see some basing here before we start to buy the rip. I would inevitably be looking to sell that because the sterling still looks like it's on a pretty strong path to the downside. But above this near term, the risk for a pop higher is there. So I just want to give you that warning. A break below this, you're looking for the median line off the lows, but honestly, we've already soared through that a couple of times on both the median line and the parallel. So, the risk with a close below this region is really for a drop into like 150.86. And that would be a 618 of the yearly range. Near-term resistance and near-term bearish invalidation level is held steady right at that region at 53.30 into 53.80, 53.60, excuse me, this region here. Any questions on the British pound before we move off? He says G20, okay, this is ECB says that, or Draghi saying that the G20 committed not to engage in competitive devaluation. Yeah, I don't know what that means. It is true that the ECB insisted to exclude any depositor bail-in for Greek banks. Kind of like padding that side of the argument as well. Okay, the headlines are going to keep pouring in, guys, and I think we got the gist, like I said, of what he's going to say. So we'll look to price action in the opening range for U.S. trade to give us some tips on this, but looking for some support, possibly a rebound here in sterling. Dollar CAD looks like this. Still no plays. Mark Haverman, I don't know if you're in the room, but still no plays here from me. A couple of times this thing looked like it was pretty compelling case to try to press a short, but it has been unable to materialize. In a chop fest like this, guys, it's better just to stay aside. I think we have much more cleaner levels on dollar yen, euro dollar, even sterling dollar more so than dollar CAD. But I just do want to bring this up that we are in this sort of range of capitulation here once more. You could get that stretch into 113.45 and 134.50, then see this thing turn over. I don't know. Here's a September open marker. We'll continue to watch this one for the close of the week is really what's going to be important for me on this. Okay. Raj, I don't know if you know or not, my man, but the ECB presser is going on. He says, Mike, what happened to the euro dollar? Come on, Raj. It's ECB Thursday, man. They came out with much more dovish rhetoric than expected. We were just going over it here in the webinar. I don't know if you just popped in, but it's obviously going to be pretty bearish for the euro in the near term based on these premises of what they're saying. So we're still going to be looking for that support. See if we can get a stretch into it. We're there right now, 111.07. This is where you'd expect to see your first area of near-term support, guys. So we'll be watching this with great interest. You have your 100-day moving average, 618 retracement, the works. So as the dollar index tests 12,071, which is the reversal day close, we went over that as well. So let's see if we can get any type of meaningful basing down here. We'd want to see a 30 pop rather before we start fighting this. But you're definitely coming into an area of some near-term support here. Raj, yeah, so we're not going to do stuff like that, right? Is it good to buy euro here? Where are you going to put your stop, man? I mean, look, it is support. So yeah, it could be a great place to buy the euro, but Raj, direction's only 50% of the game, man. You need to have some sort of strategy here. It's not, I think it's going up, so let me just buy, right? So I want to see some basing. I want to see something happen in price action. I want to see this get out of oversold territory, and then I'll take a stop against the low. Because guess what? Looks like it's going to make another run right here, and then we'll be stopped. So just keep don't get too excited, guys. We have to try to stay as benign as possible to what's happening. I know it's hard, but it's key. It is loaded with support here, though, so I do want to see a strong hold. If it breaks, it's likely to be a pretty dramatic drop. It could really wash out some hands. So Just keep that in focus as we head into the US Open. Any questions on any of the dollar crosses that we covered so far, guys? Aussie, I'm just not involved in, nor will I be interested in. Typically a decent performer on NFPs, but it's just been a one-way slotted trade, and from a scalper's perspective, it just isn't really there for us right now. It is holding pretty well, you're right, but does that mean it's a sign for me to buy, right? Just because you're holding support, it's not necessarily going to be a buy, Raj. So I'd need to see a change in behavior before I start to fight this really strong downtrend. Kiwi, similar situation, although I would like to play Kiwi by way of Euro Kiwi. I was actually going to put this yesterday on SB, guys, but I didn't want to do it in front of the ECV just because you have such huge event risk, and the Euro Kiwi has such a massive ATR. You're looking at 320 pips on a daily basis. So again, even a couple of scalp stop outs is going to be a big chunk. So more so than the daily chart, which isn't that compelling, is the intraday chart. And this is sort of what I was looking at yesterday. Might be too clean, too perfect to pan out, but you can see some median lines, basic median lines off the lows, given this thing some structure or play over the last couple of weeks. Pitchfork off the high. Also, I put this in yesterday. You had no conviction that this was going to be in play yet. Looks like we're following the broader gradient, but that puts your target down here, near term. And if we take a retracement off the lows, I would almost be willing to bet some money that you're basically pretty much dead on the 618. Okay, 618 comes in just a little higher. We're actually testing that right now. So a very simple setup, but looks great. You know what I mean? It looks really good. I just need a little bit more conviction that we're actually rebounding off this. The great thing about these, or the thing that you need to be mindful of, guys, with any sliding parallel formation, pitchfork, whatever you want to call it, is that we really need to see the market at least react to one of these slopes to get some sort of conviction on the play. Andrew Smith says just took 50 pips on dollar yen. Thanks for the solid levels. Hey, cheers, Andrew. Hey, I'm just pointing them out, man. You're the one making the trade, so well done, sir. Well done. It's a very compelling setup. It's one of my favorite setups, and for those of you who know me, I'm typically one who calls dollar yen the abomination, just because well on early in my career, I wiped out a couple of accounts on it, but here is it's a very clean setup. Watch 119.88 if you're still holding shorts, guys. Very interesting area of support there. I know we've whizzed through it a couple of times, but it's still the 2015 Open and the yearly Open that we made in January, so sort of an important level here. Euro holding well, says Raj. Yeah. So here's one thing I want to note, guys. Opening ranges. We don't talk about this enough. Also, from a scalping perspective, I like to use the opening range for an hour, and I'm not using that as a strategy. But typically, if I'm in a position, I want to hold it through the hour. So if I'm short dollar yen, and it's I don't know, 8:45, or let's say it's 9 o'clock, and the market is on the way down. I've been short, and 9:45 is coming around. We're still moving lower. I'll typically want to try to hold it through the 10 o'clock hour to see if we can get that stretch. I know it's a weird concept. We can go into this a little bit deeper later on, but when you're looking at real micro price action, even the hours, you'll tend to see a market low towards the beginning of the hour, market high towards the end of the hour, and vice versa if we're in the bearish territory, broadly speaking. So one thing to note. So yeah, it's just opening up the 9 a.m. hour here in US. You have a half hour before US cash markets come online. I just wouldn't put it past this thing, Raj. Right? We're still in oversold condition here on the momentum signature on the 5. It could very well be a great trade. I don't want to stop you if you have the risk tolerance for it. Put a stop, basically 30 pips. Still pretty big for me, considering we're only looking for 38 pips, and you're fighting a pretty strong downtrend. So keep that in mind. Sterling, where's your stop? He says, I'm long Sterling. Any view? So Raj, Again, we went over this stuff, man. This will be archived so you can see it at your own pace. Just remember, we're coming into a major area of support. Okay, this is the region that you want. So if you want to take a snapshot of this picture of this chart, feel free to do that. This is the major area of support I'm looking at. 152.18 actually constitutes a 100% extension off the highs. Key support. Okay, and those are the pairs that I'm looking at, guys. If you have any questions or trade setups, please feel free to throw them out. I just wanted to touch base on the setup with the Aussie key from earlier in the week. Continuing to play like textbook. I mean, if all we had on this was just this trend line and just these levels on a Fibonacci level, and obviously that what is that? The July low day close. If we just played that, you'd be just basically playing ping pong back and forth for a couple of months, making a nice play. So, obviously we wrote a piece on this with the reversal here that we made coming into resistance. Here's what the scalp looks like. All the levels to the downside have pretty much been taken out into that 110.12 level. I would watch, and as a disclaimer, again, I'm out of this already. Had a nice couple scalps on this earlier in the week, but you're basically looking for this drop here. Computer is so lagged. I apologize, guys. You're basically looking for this break here to open up a decline into 109.55 and then 109.45, that region. 109.55 actually turns out to be it was a swing low from somewhere. In any event, 109.55, 109.45, guys. Keep that area in view. That's going to be the next key support structure if we break below this. This is a trade that I would rather play if you're trying to play the Aussie weakness. I'm not really interested in playing Kiwi weakness per se, because Kiwi has been holding up pretty well and actually looks a little bit better than the Aussie in my personal opinion. You have the RBNZ on tap next week. Remember, that's a pretty big game changer. They are expected to cut rates. So we'll see if that impact has been priced in already, but a good way to be able to play some Aussie weakness without having to have long dollar exposure per se, as the dollar index continues to just basically hold below the high here. All right, so Aussie Kiwi levels unchanged, still pretty rock solid on that. Ram Prasad, great to see you, sir. Says, can we please share your quick overview of Swiss yen? I don't even think I have a chart on that, to be quite frank with you. I don't really trade Swiss pairs. I was never a fan of central bank interventions or pairs that are based or have a heavy hand from the central bank. I guess you can say that about every central bank these days, but let me see if I have a chart for you. Are you in anything right now, Ram Prasad? Okay, I mean in Euro Swiss. Are you holding something there? I'll look at it for you if you want to take a look. Or Swiss yen rather, that you're asking about there. I'll take a look at it for you if you want. Okay, he says yes. All right, let's take a look. Okay, so this is the weekly chart. Start with the top-down approach real quick. That's some scary stuff right off the bat. Come on. Oh, wow. Not bad, huh? Hmm. Okay, confluence break there as well. Not a big fan of that slope. Probably best to use the close on that. And the low actually comes in here. Okay, so just to give it some color, here's the juncture that we're trading at. The one other thing I'd want to add is to see if the extension off the high comes out to be any major key overlap on that. Oof, it couldn't get any tighter than where we are right now. So look, you're testing, flirting with a major area of support. It's basically this region into 122.76, 124.60. Quarter of the daily TR is 75 pips, so a much wider range. Any support triggers? Yeah, it looks like the only support trigger that you have here is already given out. Okay, very interesting trade. Thanks for bringing this up, Rampersand. This is now a weekly. Okay, so we're going to drill in. He says, looking for a break even or 126. I am long from various levels. My average is 125. Yeah, watch this break, man. If it does give out, Rampersand, you're likely to see this thing really fall apart. Okay, so you're all right at near-term support. Let's look at this at a daily. Okay, and if we follow this slope, yeah, 122.75 is your last ditch effort, to be quite frank. I'd want to see that hold. I'm not sure where you have your stop on that Rampersand, but that's going to be a big level for me. If we break below that, you're basically looking for a drop into the lows that you made. For the year. Basically, be looking at the yearly low. Yeah, and intraday momentum still seems pretty bearish. Watch that 100% extension. That would be my biggest thing for you on that one, Rampersad. Best of luck on that. Raj says, Mike, what would make you get long in the euro? What confirmation are you looking for? So, Raj, it's the same as the strategy's always been, my man. We're looking for triggers. We're looking for a change in behavior for the momentum signature. And for me, it needs to be after the open. You know, it's likely that U.S. market base comes online again, Raj, and they jam this thing into the lows again. I don't want to be there. I don't want to be that guy, right? So I'd rather, if I'm not positioned in a position that's already leading into the market open, I rarely will get into position right ahead of the open. Now, just for the record, I do think you're at support here, and I do think you could see it bump higher. It's just we have to stay disciplined. I'm willing to forego a bit of that range to get the proper trigger. And that's all it is, guys, is putting yourself in a scenario where you're in a much better position to take advantage of the move. Um, so if we get momentum, let me answer your question straight up, Raj. If you get momentum break back above 30 on the 5-minute trigger, and this thing gives me a nice little hold here above support, great. I'll look for a pullback to get stopped or stop against this to get back on the long side. I'll be looking for long triggers. Right now, you don't have any long triggers. Momentum is an oversold condition. Draghi is still speaking, right? So you got to temper your expectations and try not to get so excited because at the end of the day, um, It can lead you some pretty rough decisions. Yeah, you're more than welcome, Raj. I hope that helps, man. Kelly, I hear you too. No worries. I'm right there with you. Okay, we got a question from Dale. Says, Mike, I know it's not your thing, but can you look at Sterling Oz short? Sure, man. Absolutely. Um, you're saying want to know if you see downside in the coming weeks within weeks. Nothing I would hold you to. Just want your thoughts. My short trade is based on the weekly RSI and overbought, and MACD is about to cross over. Dale, no problem, man. I'm always willing to give you guys my opinion on anything. So feel free. That's why we're here. All right, Sterling Oz on the daily. Here's the monthly open. We should start dropping markers now in all our daily charts. We'll do that today. So you know what, Dale? I loved this trade until this day, literally. The 24th really messed everything up for me because on the stretch, you overshot the upper median line parallel. We were trading so neatly within this formation, and the slider was holding like a charm. We blew through it, came back, closed back below it. So I don't know what to do here, Dale. My honest opinion, from the daily perspective, and that's why in the daily, if I don't have conviction, I don't even drill in. But just so happens, we'll do that here today for Mr. Dale. What are you targeting on that short? So Dale, near-term momentum is teetering out with 60 holds here as resistance. That's the July high. The thing with me is this again, I hate using these stretches, but I need to give it some structure. Hmm. Interesting. Hmm. Um. Oh, you're looking at weeklies. You're looking at 500 pips. Okay. Okay. Um. Yeah. Here's my problem with that, Dale. I can just tell you from the fundy side, but before I even get into the technicals, it's all about the RBA. We got them out this week. They didn't do anything. Inflation data may come out that shows that inflation's slowing some more. The big thing with Australia is you really got to watch China pretty close. Biggest trading partner. They have very heavy resource exports, so it's going to be interesting to see if a material slowdown in consumption in China does hit the Aussie markets even more so. That's my concern with the Aussie. It is holding up. I do love a rebound, Dale, and I guess 500 pips wouldn't be that big actually on this pair, but I would say right here is where the major support is, that former median line parallel, maybe 217. Yeah, either way you look at it, I would be looking at near-term support. I mean, this is going to be pretty huge, right into 214. I would be looking at 213.76, and then the 100% actually lined up pretty well with that 38 too. So I'd be looking at like 211. On a breakdown, my major thing with this, and again, you know, this is not my major play here, Dale. I'm much more short term, but the major area of support here that would need to break is essentially the monthly low for um, excuse me, not the monthly low, the near-term support structure here for the weekly low that we made last week. You're lining up a lot of stuff there, including the April highs. Deal, does that help? I hope that offers some clarity there. Kyle wants to look at dollar MEX. Also seeing big moves, capitulation, consolidation, whatever you want to call it. Certainly in play here near the highs. Typically, these are continuation patterns, so most of the time you look for those to give us a break to the upside. Near term, I still think you're risking one leg lower to finish this correction. Not a pair I trade at all. I can't say I've ever actually pushed a trade on peso to begin with. But Kyle, that's what I'd be looking at. These extensions actually date back to the ascent off the low that you made all the way back in 2013. So then pretty good in play. Dale says, yes, a lot. Thanks. Hey, you're more than welcome, sir. Mark says, hey, can you explain why the cash market opens is important? Well, it's when the market influxes and there's much more market participation. Remember, at the end of the day, what makes technical analysis work is it's groupthink, right? The more participants that are involved in the market, the more emphasis you can put on price action, okay? Because there's more inputs. So just inherently, when the cash market opens, you have an influx of liquidity, an influx of all these people who are opening new positions, closing positions, trying to get in, trying to get out. And that increase in market participation adds validity to what you're seeing in price action. Does that make sense? Much more market participants are in play. Could you, okay, yes. Makes sense, says Mark. Dale says yes a lot. Raj says, Mike, I don't know if you've noticed, but when the London high or low is formed, it's normally rare that the high or low is broken during the day. Is that true? That's completely subjective, Raj. I'm not sure what you mean. When the London high or low is formed, it's normally rare that the high or low is broken during the day. So I'm not sure what you're referring to, Raj, or if that's a question or not. I mean, you look for an opening range for the first hour of trade, right? Or the first 2 hours of trade, whatever the market's giving you. Once it breaks that, you're trading against that high or low. So I'm not sure why you're looking to break the higher low. Maybe I'm reading that wrong. Let me know. Kyle says, thanks, Mike. Hey, you're more than welcome. Take a look at Euro Yen now. Did we just miss it going over this discussion? Okay, it's right into that support structure. And Euro, so Raj, Euro still basing. I mean, again, keep your patience. You're still right near the lows. We'll be watching that. You couldn't see on top side break above 30 here. Might be worth a scalp. Euro Oz, a little bit lower to go, right? Euro Yen. Euro Kiwi, a little bit lower to go. So all of these pairs look really primed, guys. And we'll see if we can get some entries on these. Sterling's doing nothing. Dollar yen, a little bit lower to go. Full on breakdown, looks pretty good. And guys, I mean, again, you know, it's horrible for me when I'm doing these webinars because I miss it, but look where the dollar just topped. Look where the dollar just topped. When we started the webinar, we were right below this trendline resistance, right? There we are. So if this blows out during US trade, sayonara. Euro's going straight shot down, look lower, and maybe even the Aussie see a break of support. But certainly the dollar would see some serious strength if we were able to make it through this 12,071 barrier to the upside. All right, imagine so many people lost out on the euro just now. Everyone was thinking it will hold 112. Markets are crazy. And Raj, that's why I don't want to listen to what the markets are looking at, guys. We need to focus on what the technicals are telling us, and that's it. The more market noise you hear, the less confidence you have in your own strategy. And that's what I found personally to be a huge part of my trading. You know, it's very important to know what's going out there, to know what the sentiment is out there. But when it comes to key levels, analysis, and this, I don't even want to hear it. I want to look at what I'm doing. I'm examining the markets under our own discipline, and we'll react accordingly. Is the dollar pulling back? Raj, again, these questions are questions that you're trying to interpret, that you're going to be able to predict markets. Guys, it doesn't work that way, right, Raj? You're not predicting markets. I don't know. All I know is that we're reacting to resistance. And guess what? I'm looking for euro longs off support. That's how you got to think about it. You see the difference, Raj, between that? Kelly, I'll help you. No problem. Let me know when you want to do that. All right, we got to stop that. It looks like we'll wrap things up here, guys. So watch 12,072. Um, it's very significant for the dollar. That's all I can say. And if that does break, forget the dollar shorts at that point. Keep Euro Aussie in hand. The Euro crosses might see a little bit of a hangover today as you head into the close, guys. Tomorrow's NFP print. It's going to be a thin liquidity Friday, I can almost guarantee you. Wall Street and downtown Manhattan's already starting to filter out. Last full weekend of the summer here in the U.S., so people going on vacations, last summer trips and whatnot could cause some excess volatility and whipsaw price action on the back of the release. So make sure you're prudent into tomorrow's NFP prints. We'll keep you updated on SB Squawk. And here's the first week of September trade wrapped up, guys. It's going to be an awesome month as we get closer to the NFPs. Things are likely to get crazy, and we'll be here to cover it all. So till then, best of luck trading, guys. Have a great weekend. For those of you who have an extended weekend, enjoy. A quick reminder, I will not be here on Monday. I think Jamie won't be here either. We'll give you his updates as much as we can, but markets will tend to be really dead. You might get some play on the Asia Open, but Monday, I don't expect much from Europe heading into US, barring some sort of development as we really just put this, the Fed on a mount heading into the latter part of the month. It's really going to be the main player. NFPs tomorrow, just a quick reminder, 8:30 Eastern, we are expecting a slight change in the unemployment rate. Watch for the participation rate, the broader market labor participation, okay? If unemployment upticks, but you see that increase, then that's going to be a null. That's going to be a good, okay? And that you're seeing market participation started to increase. Draghi says, here's a comment coming out, by the way, guys. Draghi says, no one wanted to increase asset purchases right away, which means that it is on the table, and you're likely to see that reflected in what we're seeing in price action today. Raj says, come to London, I will treat you. Cheers, London. Cheers, Raj. I'll let you know when I'm in town. Guys, have a great weekend. Gonna end it up and wrap it up there. We'll see you next week. Best of luck trading tomorrow's NFP print. Cheers.